Hi, everybody. This is a Physics of Bitcoin show. We are back after quite a large break. Um, I was in Europe. I will tell you a little bit about that, about my experience of going to Europe and what I did there. This will be the time for the show since now on, and we will try to keep it very regular. So we have a few announcements. The first one is, and you can see from the logo is just temporary logo. We are working on a more official one. But basically, this show will be not anymore a Giovanni and Stephen show. It will be officially one of the activities of the Scientific Bitcoin Institute. That is this entity where that I and Stephen have worked for some time. We are recruiting a team. Me and Stephen are the director and vice director. um, so let me tell you a little bit about all this stuff. And next time we can go a little bit deeper. I have actually slides that I presented at different conferences or meetings with the agenda. We will discuss the manifesto. But basically, the main idea is that this is an official non-profit organization. Is incorporated here in the United States, but it will have a global scope. And the main idea is that it's going to be a hub for all kind of different scientific research on Bitcoin, because the main thesis is that Bitcoin is a worthwhile topic for scientific exploration. So we are not just interested in price, but anything that has to do with Bitcoin as a system. So that is the main idea. That is, of course, is related to what me and Stephen do in terms of the theory that we have elaborated, that is Bitcoin is a scaling system similar to many other systems we find in nature. But it's not only about the power law. It's going to be about studying Bitcoin scientifically. So anything that has to do with the role of energy, the mining process, the impact on the environment, the impact on economy, sociology, psychology, all these topics are valid topics. We are going to create official collaborations with different universities. Eventually, maybe we will be linked to one particular university, but we want to keep a certain level of autonomy. But we have a very strong connection, for example, at the point where we are actually funding them. We are going to raise fund. We are funded pretty well. We will discuss that later. Like all the public institution, a lot of our activities will be very transparent. So we want to let people that support us, what we are doing with the funds and so on. But we have a pretty good budget for this first year. Of course, we're working on a website. You will be able to donate if you want to participate or be even a member. There will be perks for the members, like having access to indicators and other activities that we do for our members. We're also having opportunities for corporate sponsors that are going to receive also services and perks. I was saying we work right now with a few universities. We have contact with the Italian University in Lugano. We have a contact with the Polytechnic of Turin, that is kind of like the MIT of Italy. We have a special group that is interested in cryptology in general, and we want to understand Bitcoin better. And so we are going to have a strong collaboration, like people that are working with us in writing papers. Eventually, we are going to have even a scientific Bitcoin conference where people can present their research, scientific research on Bitcoin. So a lot of very interesting activities. So little by little, sorry, I have some cough. Little by little, we will introduce more ideas around the Scientific Bitcoin Institute. We will show you the manifesto. and discuss it point by point. I wanted just to give a quick announcement. I have been in Europe for about 4 months. I went to several conferences. The first one was in Bucharest, Bitcoin Balkan. Then I went to it was not a conference, but it was a local meetup. But we had almost, I think, 200 people showed up in Munich. Then I went to Lugano, where I presented. This was before Plan B. It was a smaller conference that was focusing presenting Bitcoin to the corporate world, in particular companies that want to be treasury companies, but also bank investment funds. So actually, it was very impactful. I had and I was the first presenter. So if somebody wanted to know about Bitcoin, got introduced to Bitcoin through the power law. But I had a lot of very good comment. People were coming after the lecture to me and wanted to know more or asking my contact information. It was very, very fulfilling. And then I went to Amsterdam for another conference. While I was going to Lugano, I met this man that was in official Italian business attire. I knew that he was going in the direction, so probably was related to the financial world. We started to talk. He wanted to know more about Bitcoin. His colleague jumped on the train a little bit later. He wanted me to repeat the entire story that I was telling him. So he seemed genuinely interested. And actually he told me, you know what? We have this conference where we discuss opportunity and risk for the futures. We have a different professor coming from all over Italy, different. It was mostly concentrated on pension funds because it's almost an existential crisis in Italy. We have so many people retiring and little money to support all that. So he wanted me to go and present about Bitcoin. It was a 2-day conference. Somebody that I just met on a trade, he was so interested in knowing more about the power law. And this actually is is an organization that is studying these things, financial opportunity, trends. There were a lot of talks about AI, of course. So we're going to collaborate with that, with this organization. But it was really, really cool. And then I went back and forth with Lugano. I had several meetings with one of our main sponsors. Eventually, we will let all the sponsors and all the people that are helping, supporting the institute. I want to make sure that they are fine with some of this information. But yeah, so it was very, very productive. I know that I was now very active in the social media and also in my Discord community, but I was working for the cause more than ever. And I met a lot of people that is amazing because, they could do anything else. They are, they join the Bitcoin world very early, but they are focusing making Bitcoin, what is supposed to be this revolutionary technology that is going to change the entire world, like basically a revolution. And it's amazing that I was involved in this world of these very, very dedicated people that are making Bitcoin their life mission, So this is what is going to be also for me, in particular now that I have this new role as a director of a scientific Bitcoin Institute. Okay, this is more or less what I wanted to announce and let everybody know about. Do you have any comments or questions?
Well, I'd just like to add that, there are institutes around Bitcoin that look at things like public policy and so forth, and people that study the energy side and, fight the FUD against whether Bitcoin is green or not and so forth. But Giovanni felt that there was a very large lack in not having an institute focused on really scientific research method applied to the analysis of Bitcoin. And he's been exemplifying that, for over a decade now. in applying the analysis techniques that he uses related to not just the power law, but understanding networks and how networks grow and develop. And Bitcoin is a very special kind of network that has incredible properties of endurance and anti-fragility. I'll show one or two things in slides today about that. So I'm very excited and honored to have been asked to be associate director and be part of this. And the intent is to publish, scientific grade quality research in peer-reviewed journals that we'll do between Giovanni and myself and the associates at the Institute, who will come as, maybe directly supported by funding from the Institute in terms of graduate students and postdoc level, but also the research tie-ins with the professors at these universities in Europe, in Asia, hopefully in the Americas as well.
Very good. Okay. Stephen, do you have an agenda that you want to show and discuss today? Oh, I think we lost Stephen for some reason. Okay, let's hope that he comes back. So in the meanwhile, if you have any questions, guys, about the Institute, what the Institute is about, and the different activities, we will have and by the way, little by little, these things will be clear. We are going to have a website that will be very interactive. There will be charts that people can consult. A lot of the things that I'm doing right now in terms of the, for example, I have these indicators that many people access. They will be also accessible through membership with the Institute. Okay, invite me back. He's back. Okay. Yep. Yes, you're back.
Yes. So you want to finish that thought, and then I'll share the slides.
Yeah. So, visit the website. It's not yet active. We are actually in the process of hiring professionals to develop a website, but that will be our point of reference for the website for the Institute, and there will be announcement there, different activities, maybe lectures, that you can follow, but also scholarship opportunities from people around the world. If you're a student and you want to develop these as your thesis, or your PhD dissertations, we are looking for students to support everywhere. We are going to have different branches in Europe, in US, Asia, and so on. So I'm very excited. Like I said, we will little by little we reveal more, and hopefully the Scientific Bitcoin Institute will be a very driving force in our community. Go ahead, Stephen, and maybe you want to show your agenda for today.
Okay. Let's get that in full screen mode. Okay, this is number 36, Physics of Bitcoin, after a bit of a gap, but there was a lot of important stuff that was being done in the background. So I hope you'll forgive us. I want to talk about autopoiesis, which is a word you probably haven't heard, but I will define it. I want to talk about Lambert W, which is a technique to measure the maturity of the Bitcoin network, probably another term you haven't heard. I want to revisit where we are with the power law trend right now and for the rest of this year, just the trend direction. And because gold did so well relative to Bitcoin last year, I want to revisit the Bitcoin gold situation. If we have time, I might say a bit about the proposal or hypothesis that I have around log periodicity of the schedule for the bubbles. Okay, I just wanted to remind people that Bitcoin is the first scientifically precise monetary standard in human history, And it has all the attributes that one needs. And it has all of the resilience and endurance that one needs. This is not a new idea with me. Safety laid it out in his book in 2018, The Bitcoin Standard, that the fixed supply and predictable issuance make it a form of sound money, fundamentally different from discretionary fiat, a new kind of monetary standard. I assert that this is something humanity's been in need of for centuries, like the meter, like the kilogram, like the second. We have something that is fixed, it's absolutely finite, it's highly precise. So that's scientific precision of 15 digits once you look at sats and the number of Bitcoin. And it is, grounded in science and technology. It comes from energy and math and game theory that ensure no tampering. So it's just the most appropriate. And when I talk about autopoiesis, you'll see that it's even more so. So what is this word? I've shown you the syllabary for this, the pronunciation. Autopoiesis. Auto, of course, is self or automatic. It comes from the Greek poiesis, which means creation and production. So autopoiesis means self-creation, self-production. This is a relatively new word. It was introduced in biology, around in the early 70s, so half a century ago. And it certainly does not apply to the US dollar. It also does not apply to gold in terms of its monetary usage. You have to have self-creation, self-production, not from an external source. So for the dollar, all the rules come from the Fed and the Treasury and policy committees. And when you have big shocks, you end up resetting the regime. We saw this in 1933 when all of the gold was confiscated in the US from the population. We saw it in 1971 when there was the complete elimination with the gold standard. We see it in things like the Plaza Accord, when they decide collectively with some of the key trading partners to reset the regime in terms of the levels in the foreign exchange market. And we saw it with even more recently with the balance sheet explosion with QE in 2008, 29 timeframe. And then there's another regime break with COVID when there was a 40% addition into money supply very rapidly. Now, as far as gold, it sits there. It's well defined. It's just atomic number 79, but it doesn't reproduce its monetary structure. It doesn't control how it is created in terms of the monetary form and how it's adopted. That's all done externally, not endogenously. So it's done by states and institutions, but culture's involved, technology's involved, commercial enterprises are involved in terms of mining and assaying, minting. And then the states took over and said, well, only we can mint, and these are the only defined usages of gold coins in our nation. Bitcoin, on the other hand, satisfies all the necessary conditions of creating the money, defining the money, having its own ledger. It scales with value. It's globally neutral. And in fact, it has a path-dependent monetary memory, which is a long way of saying it has a power law trajectory. And of course, completely defined scarcity and protocol. So the system closes on itself and develops on itself. And there's a way to measure that. And I'll show that with the Lambert as well as with the power law index itself. But before I do that, I wanted to show you a different kind of candle chart. I've never, in all my life, I've never seen a log candle chart. And this just kind of occurred to me, so I went and did it. And the important point is that normally when you see candles, they have duration of a candle is 1 day or 1 week or a month or a year. They all have the same duration. Well, these candles all have different lengths. So the candles early on are only 0.37 years. And the last candle out of the dozen or so, maybe 11 candles, because they're spaced by 0.1 in log time. So we've got 6 orders of magnitude of price On the y-axis, we've got 1 order of magnitude of age on the x-axis. So you're seeing the log 10 of age, and the spacing is 0.1. So you have 11 data points. And the last candle has a time width of 3.7 years. So it's 10 times as long as the first one, because the age went from 0.2 to 1.2. You added 1 in the log, which is a factor of 10. So that's why the candle's 10 times as long. So if you plot it with, only 11 candles, you see very clearly the slope. You can run an OLS trend. You get 5.68. You have a QR median, it's 5.86. It's the same familiar numbers that you've seen for ordinary least squares. Slopes are power law indices, and for the QR slopes. So this is just another way to demonstrate the continuous scale and variance nature of Bitcoin price. And it's very interesting. There have only been 2 down candles out of the 11 in the whole history, which is fewer than when you plot annual candles. Okay, this is the more traditional power law. You only need 2 parameters. You need a general scaling parameter, and you have a power law index. And this chart shows both ordinary least squares as the blue solid line kind of running through the middle, and it shows 5 quantile regression lines at 0.1, 0.3, up through 0.9. So the 0.5 is the median, that's the red line. You can see that the blue and the red line are converging over time. The major bubbles in 2011, 13, 17, 20, 21 are marked. And you can see that they come down both in their sort of total energy, but also in their height relative to the median line or the mean line of either the 0.5 quantile regression or the ordinary least squares blue line. And that's, of course, pulls down the 0.9 level. And it has a much lower slope. Its slope is at 5. It's heading down towards the rest. So they all have different slopes, and they're converging, and that's reflecting that the bubbles are decaying over time. So we're at about 40% year-over-year trend, which you just get from that equation, in the sort of upper left middle. 1 + 1 over age raised to the kth power, where k is the power law index. You subtract 1. That gives us the current percentile growth. And the projection for the end of the year is 160,000 in either case. So why do we have this constant slope over time? One analogy is with viruses, and where you settle into fitness exponents. Here we're reflecting the constraints on the environment and the internal potential. So it's the interaction between the intrinsic nature of Bitcoin, its intrinsic power law growth, but it has to interact with fiat macro and liquidity and regulatory environment, and the network develops fat nodes. So if it starts out exponentially, the constraints is the network develops more structure, such as fat nodes, and also the constraints as the way in which macro liquidity enters into the Bitcoin network and tends to stay over the long term, creates a self-organized critical state, and you get the emergent exponent. And you can graph how that exponent develops over time, the power law index, how that develops over time. And also the liquidity rails adjust, because you get more and more shift towards bigger, deeper pockets. So you started out with cypherpunks and the very earliest exchanges and retail, and then family offices, and then hedge funds, and then we've gone to sovereign wealth funds and treasury companies and ETFs. And these are larger and larger pools of capital. And as you go up the scale, they also have longer time horizons, lower time preference, because they make decisions in a more judicious way than the average, retail leverage trader. And also, when the price overshoots, it attracts those new higher tiers of capital. And I've got this virus analogy. I wrote a Substack about, is Bitcoin alive or an AI? And the conclusion is that it's kind of like a virus. It's not fully alive, but it requires a host and it interacts with the host, and you can think of it as a beneficial virus. Now let's move to Bitcoin and gold. And the first thing I want to remind everybody, because the gold bugs like to come in there and get happy and tweak. But if you go back to 2011, gold's gone up by about a factor of 3. Since 2011, Bitcoin's gone up from less than $1 to peaking above 100,000. So more than 5 orders of magnitude. So these things are very different, and you can also just see from the way the blue curves go and the gold curve goes that the correlations are sometimes positive and sometimes negative. They just don't correlate all that well, although gold seems to lead. And the right-hand chart is, in fact, the rolling 1-year correlation, 52-week correlation of Bitcoin versus gold. And, it's all over the map and rapidly changing. So unstable on a yearly and shorter time scale. So you can do a regression against gold, and this has both ordinary least squares and quantile regression. It's the same levels as we had on the other chart, but now Bitcoin's measured in gold ounces, and it's gone from when it was age 2, when the log age was 0.3, and this whole chart starts, it was minus 3.5. So it was 3/10,000ths of an ounce of gold, and now it's about 14 or so. It's about 14 right now. And you see the same structure in terms of the peaks. You've seen the same convergence in terms of the quantile regression levels converging towards the ordinary least squares regression. And both of those regressions give you a value of about 5.3. And they have high R squared of 0.94. Now, fair value is up around 40 something ounces or even 50 ounces, depending on which technique you use. So we're down by about a factor of 3 relative to gold. So Bitcoin has a lot of work to do to recover against gold, but it's also clearly kind of a buying opportunity relative to gold now because of that. Okay, now this is looking at the maturity index called Lambert W, and it's also looking at the power law index. First of all, the power law index here is against Bitcoin against gold. And what this is a backward looking index. So starting in 2012, if you ask what's the current power law index, looking backwards only, it would have been 3.5, and then it dropped to 2.7. And then you had a 2013 bubble, which was quite a powerful one. And so it went all the way up to 6.7. But as more and more data is accumulated, the system stabilizes. And so the system stabilized around end of 2015, beginning of 2016, as it dropped back below 6. And ever since then, it's been confined, measured in gold terms, in this interval between 5 and 6 for the power law index. And the ending value today, when I did this one, which has a little more data than the previous slide, is 5.25. And that's the ordinary least squares regression slope against gold. Now, the line below is this Lambert W, and it comes from this equation W, e to the W equals x. And the idea is that this is seen in nature, and there are a lot of examples where you have an interaction between something that's an exponential process and something that's not, and then it constrains it, and it often ends up as a power law. And so this equation gets applied to kind of qualitatively measure the strength of that and the transition of that away from early exponential growth. And it's called the Lambert W equation. If you solve it directly for using the power law slope as a metric, so you set x equal to k here and use the final 5.2 value, you get W equals 1.36. There's a little bit more sophisticated treatment that uses an inverse logistic, and it accounts for the fact that K is moving across a domain. And so you set some reasonable values of K min and K max. I think K max was set at 7 in this case, and K min was set a little below 0 as the full dynamic range that it might explore. And then there's another parameter, gamma, which measures how steep the transition is. And we put in something reasonable because we could see from the K plot that it's a pretty quick transition. And when you do all that, you get a W of 1.51. And now I will interpret that, show how that gets interpreted. Basically, here are a whole bunch of other examples where you can evaluate what the characteristic W value is, this Lambert W maturity index that it's called. It's very low for fiat. It's pretty low for the electricity grid. And for railroads, it starts to get to be about 1. For gold as money, it's about 1. For the internet, it's higher. It's 1.2, 1.3. And Bitcoin is the highest of all. It's about 1.5. And W equal to 1 is a transition state towards something that has endurance and that has some internalized structure, but also has dependency on externals. And the less dependency you have on external influences, the higher W number you can reach.
Let me ask you, how did you, this table, you found it somewhere or it's your own?
No, I use ChatGPT to make the estimates. And then I looked at them and I think they're quite reasonable. And I actually did it multiple times.
What is the data that you get, for example, from railroads?
It's
like
using,
yeah,
it looks at the way the network effects work, but it also looks at all the externals that you have to apply. So you have to apply finance, you have to regulate, you have to keep investing in it. The same is true for the internet, by the way. You have to put energy and value and pricing and governance. They're all externalized for the internet. It doesn't really self-fund, and it required a lot of subsidy to get going, right?
It's something that seems very promising. It's a very interesting approach. Yeah,
it is quite interesting, and particularly the comparison between the internet and the Bitcoin. So internet does not have native pricing. Bitcoin has its own native value coin. It doesn't provide its own internal security. Bitcoin's security is baked into the protocol. It has its own ledger, decentralized ledger. It has its own kind of lockup in the sense that, long-term investors come in and they hold for long periods. And so there's more and more capital that goes in and it doesn't leak out, so it's got long-term capital behavior and it's self-funding. It provides incentives that cause miners to go do mining, and so it funds itself that way through incentives. And actually in this chart, the only one that's autopoietic, you can give them autopoiesis and autopoietic scores too, which are different axes. I used a -5 to +5. The only one of these that's autopoietic is Bitcoin. All the others are allopoietic, which means depending on the external world for their creation and their management and their evolution. Another example is stars. So this is called the HR, or the Hertzsprung-Russell diagram. And what it is the luminosity of stars on the y-axis, which spans many order of magnitude. It's over a factor of 1 billion here. What's the bottom one? It's -5, and the top one's +5. That's showing 10 orders of magnitude. The main sequence is that whole band of various colors that runs from the upper left down to the lower right, and our sun is in the middle of that, and it's marked with that yellow circle. It's actually a little low. I don't know how that happened, but it should be up there at 1. But it's a G star, a G2 star, and it sits at the intersection of G and 1 on this plot. And you can see it's a steep power law. It varies as you move up and down the main sequence. the x-axis is color and roughly translates into temperature. And it's not precisely a log temperature scale. It's kind of quirky because of history, but it's roughly a log temperature scale. So you're roughly seeing something like luminosity rather than price and temperature rather than time if you compare it to Bitcoin. And it's flipped the other way, because in this one, the temperature increases as you go to the left. The blue and white at the left are the hottest and the red are the coolest. And where the sun is, the slope is about 4. So it's a power law with slope 4. But when you get up into the blue and white stars, because there's an effect on the size, the radius, as well as the temperature, then the index is more like 5 to 6, very similar for what we see for Bitcoin. So you can have very steep power laws in nature, not just 1 over square laws. So what happened with the sun? It's autopoietic. It creates itself. It creates its own energy. You have a protostellar cloud. It collapses until fusion ignites. And once fusion ignites, then it has the right balance to settle on the main sequence, where you've got gravity trying to compress the core, but you have pressure created from the fusion in the core, both thermal pressure and radiation pressure. And it's in this hydrostatic equilibrium for billions of years, near equilibrium. So the sun has a 10 billion year lifetime before it heads off into that red giant up on the upper right. And so you can apply the Lambert W form here, because the temperature has an exponential dependence. That is, the rate of fusion depends on actually some power law of the temperature, but also the exponential is very sensitive to the temperature, because the sun's core temperature at 15 million degrees is much less than the Coulomb barrier of driving 2 protons together, and it has to tunnel through. And that's why you get this exponential dependence. But then it's balanced against the gravitational power law that wants to collapse and compress. So as it compresses, it heats up, it burns a little faster, it produces more pressure in the core, and it pushes it back out. So that's the balance. And the W index turns out to be about 1.5. So the stability of Bitcoin, according to this Lambert W maturity measure, is very similar to that of our sun and our sun's fusion process. Okay, how are we doing on time, Giovanni? Do you want to show some slides or anything, or?
No, you can go ahead. I will give a longer presentation about the Institute next time.
Okay.
If you have some more slides or you want to comment on this, add more stuff. Okay.
I just have a few more. I'm just going to introduce to people who haven't seen it. I've written a few Substack articles on this about my hypothesis that the bubbles are spaced in log time. And the general idea is that we have a power law which represents continuous scale invariance, and the bubbles represent discrete scale invariance. And you would expect that if you impact something, and basically we're always impacting Bitcoin externally from the liquidity that's flowing in and the regulations and so forth. And when you open up new tiers of capital because you get to a certain price level. For example, Apple still, it doesn't make sense really for them to buy a lot of Bitcoin today because they're too rich. They could buy 1 million and it wouldn't really change their treasury position. Now, once Bitcoin gets to $1 million, that will change. So the increase of Bitcoin's price actually provides an incentive for 2 new levels of capital to come in. And that's how we've seen the growth up through, hedge funds and treasury companies, sovereign wealth funds, ETFs, and even strategic reserves in the case of the US and a couple of other nations. So that's the backdrop. And then, to look at this, I did a Fourier transform in log time of the residuals. So what's plotted here in the black line is the collapsed residuals. First, I did it for Bitcoin gold. You find the same thing for Bitcoin versus dollar, but it's a little more challenging, I think, sometimes to work against gold. So I did it that way first. And what you find when you do the Fourier transform is you find there's a fundamental mode, and it has this wavelength lambda of 2.07. And roughly you can think of that as the time between bubble peaks doubling. So in other words, they get stretch out further and further in time. They're not this kind of linear 4-year cycle. So the first one happened at 2.4 years. It's shown with a red vertical line. The second one happened at 4.9 years. That's the 2013 bubble, also a red vertical line. The third one, 2017, age 9, a red vertical line. So that's the fundamental mode. And that's saying that people applying a 4-year cycle were ignoring the 2011 one, and that they should include it. And if they do, they're going to maybe get a different answer. Now, there's also blue lines and a green line, and there's another red line out there in the future. So the red line out in the future represents a next fundamental mode peak timing around 18.4 years. Now, it's interesting that, was it 2019 when you did this before Giovanni? Giovanni applied the long-term Sornet log periodic power law equation that has 5 parameters. There's a 7-parameter equation that just looks at individual bubbles and has like critical times. The 5-parameter goes on for long periods of time. And when you did that, you fit the 2011, 2013, 2017 bubbles.
Yeah. What is also interesting, though, is that usually in Sornet, when you have when you use that equation to predict the peak of a bubble, the periodicity becomes shorter, right?
Right.
The period becomes shorter. In this case, it's becoming longer. That is interesting. So if this hypothesis is correct, it's also worthwhile to understand why they became longer instead of becoming shorter, right?
It's the inverse transform, right? And he has, are you familiar with that? He has this 5-parameter equation form that does not, right? Because that's what you applied. And so it doesn't say the difference between your critical time and now, it just uses that age. So it's got a cosine term with a frequency term times the age plus a phase term. That's the key term in there. And so that's what you can apply here. For this, I didn't apply that. I just did the Fourier transform, and I did a wavelet analysis, and it found 5 principal wavelets, and they all ranged around 2 to 2.1 as well. So they were confirming. And so when you did it, you found 18.0 for the next fundamental. And with additional data, it moved it out to 18.4 in gold and 18.5 if you do it against the dollar. Now you can look at harmonics, and the blue lines are the first harmonic. So they happen, in between the fundamentals, and they're actually the square root of time in between the fundamentals. And there's one that kind of matches up with little bubbles, early on, another little bubble. They're not really consequential. But the third one lines up with the 2021 double bubble, and actually with the second of the 2. And so in this framework, you don't explain the 2021 bubble as something fundamental, but something that's a little weaker. It had this double structure. It's not as tall as the others. And you say it's a first harmonic. And then there's a green line, which is a subharmonic. And that kind of lines up with the smaller mini bubble in 2019. And this shows the equation with the 5 parameters. And we're mainly interested in the term in the parentheses. So we've got this omega, which is the angular frequency, and you transform it to get the lambda that we showed before. And then the log of the age plus a phase. And then there's an equation here that shows the log of lambda. So there's this log transform. Normally you think of lambda is 2 pi over w, but in this case, 2 pi over omega. In this case, it's log lambda is 2 pi over omega to get the spacing in time as opposed to the frequency. So that's the 5-parameter equation. And so if you compare the Fourier model and this log periodic, the Fourier model ignores 2011, but we fit it. And we fit it 2013 and 2017. So does the Fourier model. The Fourier model fits 2021. We fit it as a first harmonic, but 2025 did not have a bubble. The peak that was set was only a little bit above, in log terms, the power law trend when we hit 126,000 the first week of October. And here it's explained by saying we were not expecting a bubble, but we do expect one in 2027, and you would not expect one in the Fourier model. So we have the opportunity to test these two, but now you have to think about the phase. And if you include the phase term, which looks like it's about 70 degrees out of 360 degrees, that can push it out into 2028. But just based on this, the log periodic seems like it was right 5 times. And it also has a smaller error. That is, if you compare when it hit against when the actual peak was, it's off by about half a year rather than about 1.2 years. And I think that's all I had. So thank you all for listening.
Very good. A lot of interesting information. All right. Okay, so we can conclude the show, and we will be here next week. We will try to be very regular, starting from now on. And even when I go back to Europe, we will try to keep it. And stay tuned for more information about the Institute. Okay, guys, have a good night. See you soon. Bye, everybody.